Welcome back, friends. I have good reasons to believe that a good stock market correction is on the cards. And this applies not only to Wall Street but across the world in most global indices. The tipping point could be a drastic change in the Federal Reserve policy in order to deal with the red hot inflation. We had consumer price index going over 6.2 percentage this week, and we will be having another report coming out next month in December. Now, this could be a tipping point or an area where people have not yet reconciled themselves to. So investors are really not believing that the tipping point is near, but I think it is coming pretty close. December could be one of those very crucial tipping points. If the Federal Reserve suddenly gets tougher, then the market is probably going to get into a U turn rather quickly. As you know, the consumer price index surged 6.2 percentage in the month of October, according to reports from the Labor Department. It marked the biggest gain in more than 30 years. Definitely, I believe that the Federal Reserve is now behind the curve as far as tackling inflation is concerned. As you know, they have a twin mandate of good growth with moderate inflation, and I think they are lagging behind as far as moderate inflation is concerned. It seems to be getting out of hand and it's across the board now. Generally, since the Fed has not made any aggressive move at all, the money is still flowing into the market. And this is across the world, friends. The Fed is still doing quantitative easing. The moment of truth can materialize at the Fed's December 14 or 16 meeting. If it signals a more aggressive approach to containing rising prices, then you could find a correction come in pretty quickly. But do not forget the fact that there are not many places to hide in either. Let's take bonds. Can you go to these bonds? Adjusted for 6% inflation, bonds are a pretty poor bet in this environment. Cash is useless because your inflation is eating away just the money that is lying in cash. Stocks are a good bet, but I think the correction is near. So you have probably no place to hide. Bonds are getting worse day by day, as I explained, and you have to realize that even with a little bit of bumpiness in stocks, you have to be wanting to hold, excuse me, sorry, real assets in this scenario. What are the real assets you're looking at? Intellectual property, land, building, they will hold value. The inflation backdrop would create headwinds for tech flyers, high flyers, I would say, in the Nasdaq, which is at record highs and crossed 16,000 for the first time ever on Friday. If interest rates go up, then the very high price stocks, which discounts cash flows way into the future, are going to be impacted because of the very nature of the discounting mechanism that is used to value these high flying tech stocks. The growth stocks record strength could be attributed to the Delta variants, fears, and falling treasury yields. The COVID 19 surge will subside as more people, however, get boosters, and that's across the world. In in the United States now, all adults are entitled to get booster shots. The same thing is applying to Israel, many other European countries, and this is what has uh, COVID surge as it subsides. You will find that this has uh, the reopening trade is going to gather more momentum. Okay, value has gotten rather cheap as of now. Now, if I am right about an abrupt change in the Federal Reserve uh, policy measures, then Wall Street could be getting over the shock of it fairly quickly. Okay? There could also be a good knee-jerk reaction And there could be a new desire to own high dividend yielding stocks and financials in 2022. So you could find consumer discretionary and utilities come back in fashion in 2022. Financials have been selling off recently with lower interest rates uh, being the general nature of the theme as of now. Federal Reserve has made sure that low interest rates prevail in an environment where COVID fears still persist. However, that can change once you find that interest rates uh, are going up and the resurgence of inflation, even in areas where they were turning out to be transitory, that can add fuel to the fire. You may find that what is finally coming out of the is a cake which is not yet baked. So expectations of the Federal Reserve policy will be fine tuned, and this could impact asset classes across the board. Now I'll have a one word about cryptocurrencies. They also appear to be largely leveraged in nature. Many investments in this area are highly leveraged. Even if not, once stocks begin to fall, many other asset classes can also get an impact. Cryptocurrencies could be an area which could be soon to follow suit because they have been rising so rapidly. And this is an area where people have made good amount of money and profits. So as they begin to reduce their leverage positions in stocks and elsewhere, they will run to areas where they're sitting on very good profits. And friends, cryptocurrency is one of those areas. Okay, almost anyone and his brother has made handsome returns in this year 2021, just sitting on probably any coin you can toss at the drop of your hat. So the forecast, and some people talking about the year-end rally and what we may call as Santa Claus rally, which happens around Christmas time, is probably subject to is circumspect and subject to question. So be cautious. I believe that this current week, Thanksgiving week itself, will lead to lot of jitters as the final nomination of the Fed chief gathers momentum as Joe Biden decides whether it's going to be Jeremy Powell or Brainerd. And one another thing that may come thereafter is, as we step into December, we have a new round of jobs reports, inflation reports that can turn the tide and set the stage for a meaningful correction. If you're still not subscribed to my channel, please do not forget to do so. I'd love to have you as a part of my YouTube family. And yes, we have premium and premium plus channels, which we discuss in great detail about the market on a daily, weekly basis, monthly basis. And we give you more details about the correction, how long it will last, value wise, time wise. We tell you in advance, all this based on very hard work and scientific analysis that we have been doing for the last 35 years. Friends, do join my premium or premium plus channel, and you can, for this purpose, email me at globalmoneyinvestor@gmail.com. It is globalmoneyinvestor@gmail.com. Happy investing. Have a great investing week ahead, and talk to you soon once again. Bye bye from Sunil Kevaldamani. Take care.